Okay, I basically repeated our policy statement saying that we're looking for whether the recent increase in inflation was temporary and whether the monsoon will continue to be near normal. The oil price development is very beneficial, and we will await greater transmission of our past front-loaded actions while we look and monitor developments for emerging room for more accommodation. Now, a couple of other points I want to make separate from the policy. The Reserve Bank is talking to the government about a medium-term framework for FPI limits in debt securities. This will include, one, a target for what fraction of the sovereign bond market will be constituted by FPIs in the medium term. Two, an announcement of staggered changes in limits every 6 months, with these being released on a monthly or quarterly basis. We have to determine that yet. Three, limits to be specified in rupees so that they do not vary with exchange rate movements. Four, the framework will create space for participation of different kinds of investors, which include long-term investors such as pension funds and sovereign wealth funds, as well as our more usual medium-term investors, and importantly, those coming through international central security depositories such as Euroclear and Clearstream. The overall goal of this medium-term framework will be to enlist FPIs in market development within prudential limits that we set, even as they are attracted by rates available in Indian bonds. Second announcement, the RBI has received recommendations from the external advisory committees on payment banks, chaired by Dr. Nachiket Moore, and on small finance banks, chaired by Ms. Usha Thorat. Now an internal committee of the RBI composed of DGs and the governor is going through each of these applications again. Finally, a set of recommendations will be presented to the RBI board, which will decide the final list of successful applicants. As I said before, I hope to announce at least one set of bank licenses before the end of this month. I should also add that I've received the report of the high-powered committee on urban cooperative banks. Much as we did with the Urjit Patel committee report, the PJ Nayak committee report, and the Nachiket Moore committee reports, I believe this report will inform our actions in the months to come on urban cooperative banks. It will be put out for public comment shortly. Let me end by talking about something about which there's been a lot of commentary in the press. There has been a lot of commentary about the composition of the Monetary Policy Committee. Let me start by saying that the RBI believes institutionalizing the process of monetary policy formulation is vital, given that the government has given the RBI a clear inflation objective. We've already done a lot internally in the past, in my term and before, to institutionalize the process, including having scheduled meetings with different constituencies before the policy decision, having serious discussions with internal staff based on incoming economic data and based on our model analysis, and speaking with the government to obtain its viewpoint. The final policy is usually a consensus arrived at by the governor, the deputy governor in charge of monetary policy, and the executive director in charge of monetary policy. But ultimately, the responsibility is the governor's. Going forward, there are at least three virtues of taking the decision away from the governor and giving it to a committee. First, a committee can represent different viewpoints, and studies show that its decisions are typically better than an individual's. Second, spreading the responsibility for the decision can reduce the internal and external pressure that falls on an individual. Third, a committee will ensure broad monetary policy continuity when any single member, including the governor, changes. So we have been enthusiastic supporters of the idea of a committee. Since the finance minister's budget announcement that such a monetary policy committee would be formed, we have been engaged in dialogue with the government. From the RBI's side, we wanted to ensure the structure should ensure continuity in policy as the market attempts to understand the voting patterns of new MPC members. I can reiterate the Finance Secretary's comment yesterday that the government and RBI have reached a broad consensus on what such a committee should look like and what the powers of the governor should be. While the details have to be ironed out, there are no differences between the government and the RBI in this matter.